quick. I want to just do a quick education section about the importance of these weekly volume spikes within the right context. So I mentioned them quite a few times tonight because I want to already kind of get your mind zeroed in on how this phenomenon acts. But take a look at some of the recent winners that we have. Again, take a look at CMG. Look at this substantial volume spike as this stock rockets higher. Now, you did have 3 weeks that continued higher, and then we had this nice little pullback where we were able to buy some stock. But this good quarter, which is often it's based off of an earnings report. It could be other news or it could just be general price action. Typically, it's earnings related. First of all, whenever there's a great earnings report that surprises, you get this nice halo effect for the rest of the quarter where institutions who are surprised and shocked by the positive outcome of the earnings spend weeks kind of accumulating stock, and it creates this general buying pressure. But this spike, maybe it's not a signal all on its own. I mean, there's going to be a lot of volatility on that kind of a spike, but that's really a cue that, hey, this stock needs to be on my radar. And if I can find an actionable tactical way to get in with a low risk, I'm not only now buying a short-term pattern anymore. I'm buying a short-term pattern with the backdrop of a stock like this that has great earnings, great sales, and this massive weekly volume thrust that really shows that somebody with deep pockets wanted a lot of the stock, and they wanted a lot of stock right away. And the way these institutions buy is it takes them weeks to months to accumulate. And that's one institution. So imagine several or multiple of those. And so these volume spikes is part of their footprints. And if you can do that with the backdrop of a weak general market, that's why this stock was able to push to new highs from this rally, whereas the market is still substantially off of its recent highs in August. And that's the critical difference. So we had, you're looking around, it's all these stocks. Which stock do I focus on? Well, we had a nice buy at 1630. This is sitting over 1700. Obviously, we're still, have to see what the market does, but you're right away in the driver's seat. And you're not sitting there now with some beat up old merchandise. You're holding something that has quality earnings, quality sales, and all of the footprints of institutional accumulation. And really, all of the buys we've been doing recently have had that pattern. Even though you maybe not have noticed it, you had that with Wolf. Again, with this big push higher, you would think 8 weeks up in a row in a bad market, when as soon as the market turns, this thing is going to be punished. But it wasn't. You basically just went sideways and you pushed back higher once again. So again, this volume spike is really the sign that there's sustained buying going on. Take a look at Enphase. Again, huge volume spike. We push higher, the market comes off. Everyone would expect just logically, oh, the stock's going to drop significantly now because it's had a big run. But that's the fallacy. And the stocks that's under accumulation, they go up the most, but they come down the least. And that's the true definition of a leader. You go up the most and you come down the least. Take a look at Celsius Holdings. So everyone loved that Pepsi deal when it was announced. And, the stock had that nice gap up, volume surged, earnings came out, that worked out well. And then as soon as we kind of had a down week, everyone wants to run for the hills because the stock's overbought and it's just an energy, drink maker. And, it's just interesting how psychology plays such an important role and how, everything looks so good on the way up. And then everyone kind of panics and forgets the underlying reason for the strength as soon as the stock turns lower. But all of these buyers that really jumped in to buy on that Pepsi deal, and obviously all of the other execution that the company is doing, when the market rolled over hard here again, they were the first people to come back in and do that buying. And again, like I teach, tight in range, you close this week at 98.62, you close this week at 98.28, and you close this week at 96.36. So really, in this period of time, you can really see there's definitely a buyer here actually buying the stock. And I would argue is that same fund that bought this big gap up, or someone else who realized that, hey, wow, there is something going on with the stock. And they're like a vacuum sucking up all of the low price stock in this range here. And if the market does move higher, well, all the cheap stock is gone. So if anyone wants to pay, they're gonna have to pay higher prices. ESTC was another good example of that. You can see you had this big volume spike here, but this was hidden buying, like I mentioned before. You had the big volume spike, but the market was so weak, it didn't really go anywhere. A second week again of big volume, kind of like the buy order was split over 2 weeks here. But again, because the market was so weak, the stock didn't go anywhere. But the fact that it didn't fall with that kind of volume was a big sign. And then this week, the second the market turns up, price resolves itself and pushes above recent highs, although the market's significantly off the highs. So just something to really keep an eye on. When you see that volume spike, you want to put it on a list. You want to watch it very closely. It doesn't mean it's an instant buy right now. Maybe short-term extended at a position. There may not be a good low risk entry, but there's something that's really driving that move. You have to figure out what it was. And if it's a sustainable development and the stock itself is already in a healthy position with strong fundamentals, a strong earnings, strong sales, that ends up being a top quality stock and one that will actually hold up even when the market's coming down, it'll hold up well. And all of these stocks, despite having the biggest advances, barely budged when the market came down. And that's a sign of a real leader. And then once the market starts to do well and push higher, you have a substantial move higher, like that eBay example, which I recently posted on YouTube. You can review that as a case study to what happens when the market finally does go your way. And the stock has been developing this way throughout the bear market. And that's really putting together the whole puzzle to get the best of everything.